So picture this. You're at your favorite coffee shop, enjoying the aroma of freshly brewed Kenyan coffee. You're about to take a sip when you see the price on the receipt and think, wow, this is getting expensive. Well, my friend, what you're experiencing is the subtle but ever-present reality of taxes. Taxes are everywhere, even in your morning cup of joe. Now I know what you're thinking, taxes? Ugh, boring. But trust me on this one. Understanding taxes, especially in a country like Kenya, is crucial. Why, you ask? Because taxes are the lifeblood of our nation. They pay for the roads we drive on, the schools our children attend, and the hospitals that keep us healthy. Think about it this way. When you pay taxes, you're essentially contributing to the well-being of your community and your country. It's like investing in a better future for everyone. Plus, knowing how taxes work can save you money and prevent you from running into trouble with the law. So let's dive into the world of taxes in Kenya, shall we? We'll demystify the jargon, explore the different types of taxes, and see how they impact our daily lives. By the end of this, you'll be a tax-savvy citizen, ready to conquer the world, or at least understand your next coffee shop receipt.
Imagine Kenya as a car. We've got beautiful landscapes, vibrant cities, and a nation full of potential. But like any car, Kenya needs fuel to run. That fuel, my friends, is taxes. Taxes are the financial engine that keeps our country moving forward. They fund essential public services like education, healthcare, infrastructure, and security. Without taxes, our schools would be empty, our hospitals understaffed, and our roads full of potholes. Our government relies on tax revenue to provide the services we rely on every single day. Now, you might be thinking, but what about corruption? What about government waste? And you'd be right to ask those questions. It's no secret that corruption and mismanagement of funds are serious issues in Kenya. However, that's a whole other conversation. The point is, taxes are crucial for the functioning of our nation. By fulfilling our tax obligations, we contribute to the development and progress of Kenya. It's our civic duty to pay our fair share and hold our leaders accountable for how those funds are used.
Let's talk about the tax that probably affects you the most. Income tax. This is the taxman's share of your hard-earned money. Every month, when you receive your salary, a portion of it goes straight to the Kenya Revenue Authority, KRA. Think of it as your contribution to the national piggy bank. Now, before you start sweating, here's the good news. Income tax in Kenya is progressive. What does that mean? It means the more you earn, the more you contribute. It's like a fairness system built into the tax code. If you earn below a certain threshold, you might not even have to pay income tax at all. But how does it work exactly? Well, your employer deducts pay as you earn, pay, from your salary each month based on your income tax bracket. This payee is then remitted to the KRA on your behalf, so you're technically paying your income tax in installments throughout the year. At the end of the financial year, you file your income tax return, declaring all your income and any allowable deductions or reliefs you may be eligible for. This helps ensure you've paid the correct amount of tax and can even result in a refund if you've overpaid.
Remember that coffee we were talking about earlier? That's right. The one that seemed a bit pricey? Well, VAT plays a starring role in that. VAT stands for value-added tax, and it's a consumption tax levied on goods and services. Think of it like this. Every time a product or service changes hands along the supply chain, from the farmer growing the coffee beans to the barista serving you your cappuccino, a little bit of VAT is added on. The final consumer, in this case, you, ends up bearing the brunt of the tax. The standard VAT rate in Kenya is 16%, but some essential goods and services are zero-rated or exempt from VAT. This is to ensure that basic necessities remain affordable for everyone. So, while that avocado toast might attract VAT, unprocessed food items like raw vegetables might not. VAT is a significant source of revenue for the government, but it can also be a bit sneaky. It's not always explicitly stated on price tags, so you might not realize how much VAT you're actually paying.
Now let's talk about excise duty, also known as the sin tax. This tax is levied on specific goods and services that are considered harmful or luxurious. Think alcohol, tobacco, sugary drinks, and even betting. The idea behind excise duty is twofold. Firstly, to discourage the consumption of harmful products by making them more expensive. Secondly, to generate revenue from those who choose to indulge anyway. It's like the government saying, we'd rather you didn't, but if you must, you're going to pay for it. But excise duty goes beyond just sin products. It's also levied on things like fuel, vehicles, and certain imported goods. The revenue collected from excise duty is often earmarked for specific purposes like funding healthcare initiatives or infrastructure projects. So the next time you're at the supermarket, take a closer look at the prices of your favorite snacks and beverages. You might be surprised to see how much of the cost is due to excise duty. And remember, moderation is key, not just for your health, but also for your wallet.
We've talked about your income tax, but what about the big guys? The corporations raking in the big bucks? Well, they've got their own tax to pay. Corporate tax. This tax is levied on the profits earned by companies operating in Kenya. The corporate tax rate in Kenya is currently 30%, which means companies have to fork over a significant chunk of their profits to the taxman. This revenue is crucial for funding government programs and initiatives that benefit the entire country. Now, some people argue that corporate tax stifles business growth and discourages investment. Others believe that corporations should pay their fair share to contribute to the well-being of the society they operate in. It's a complex issue with valid arguments on both sides, but one thing's for sure, corporate tax plays a vital role in ensuring that businesses contribute to the overall development of Kenya.
Owning a home is a dream for many Kenyans. But did you know that owning property also comes with certain tax obligations? That's right. We're talking about property tax. This tax is levied on the value of your property, whether it's land, a residential building, or a commercial property. Property tax is a form of wealth tax, meaning it's based on the value of your assets rather than your income. The idea is that those who own valuable properties should contribute more towards the provision of public services in their communities. The rates and methods of calculating property tax vary depending on the county you live in. Some counties use a flat rate system, while others use a progressive system based on the value of your property. While property tax might seem like an additional burden, it's essential for funding local government services like garbage collection, street lighting, and road maintenance. So, in a way, you're investing back into your community by paying your property taxes.
By now, you're probably thinking, wow, this tax thing is serious business. And you're right, it is. But don't worry, understanding your tax obligations and meeting deadlines doesn't have to be a nightmare. Every year, individuals and businesses in Kenya are required to file their tax returns with the KRA. This is essentially a report card of your income and expenses, allowing the KRA to calculate how much tax you owe or if you're eligible for a refund. The deadline for filing your income tax return is typically June 30th of the following year. For example, for the financial year 2023/2024, the deadline for filing your return would be June 30th, 2025. Thanks to technology, filing your tax returns has never been easier. You can do it online through the KRA's iTax portal, saving you time and paperwork. The KRA also offers various resources and support services to help taxpayers understand their obligations and navigate the tax filing process.
We've covered a lot of ground on taxes in Kenya, from income tax to property tax and everything in between. But beyond the technicalities, there's a bigger picture here. Tax compliance is the bedrock of a thriving nation. When citizens and businesses fulfill their tax obligations honestly and transparently, it creates a virtuous cycle. The government has more resources to invest in public services, which in turn leads to economic growth, improved living standards, and a stronger social fabric. Tax compliance fosters a culture of accountability and responsibility. It strengthens the trust between citizens and the government, creating a more equitable and prosperous society for all. On the flip side, tax evasion and avoidance undermine the very foundation of our nation. It deprives the government of much-needed resources, hindering development and perpetuating inequality.
Congratulations, my friend. You've made it to the end of our crash course on taxes in Kenya. You're now equipped with the knowledge to navigate the world of taxes with confidence. But our journey doesn't end here. As responsible citizens, we have a role to play in promoting tax awareness and compliance within our communities. Share what you've learned with your friends, family and colleagues. Encourage them to understand their tax obligations and contribute to building a better Kenya. Remember, paying taxes is not just a legal obligation, it's an investment in our collective future. It's about building a Kenya where everyone has access to quality education, healthcare, infrastructure and opportunities to thrive. So let's break the stigma surrounding taxes and embrace our shared responsibility in building a brighter future for Kenya. After all, a nation built on a foundation of tax compliance is a nation destined for greatness.